What's up, traders? Matt from the Trade Brigade here with your weekend crypto report, where as always, I do a technical analysis and give you my thoughts on the coins listed up above. Quick update to our watch list. We went ahead and removed Link, that's Chainlink USD, and instead we've gone ahead and added AVAX, which is Avalance. We'll cover that towards the end of the video. I think there might be some interesting opportunities there. It's also pretty high up in the coin market cap list, whereas Link has been sort of a bust as of recently. So anyways, jumping into our Bitcoin daily time frame to kick things off here, I think what we'll find is that many of these charts are in a similar position to exactly what we talked about in last week's episode. Notice that this is where we're currently trading, and last week we were discussing it right around in here. Again, we went full circle and retraced 100% of the up move that we saw on the Monday and Tuesday sessions. So nonetheless, what do we have to look forward to here? Well, remembering a couple of the same concepts that we talked about in last week's video, remember that we are in the midpoint of the range. So overall, I wouldn't say that you have an aggressive edge one way or another here. However, based on some of the recent structure that's built out here, you could certainly classify this as a bit of a flush point, and if it starts to break, you would really have to target the bottom end of the range to make this risk reward worth it. So if your entry is here, your stop can kind of go somewhere in here, and your reward is this area there, right? So that's roughly like a 1.5, maybe 2 to 1 risk reward ratio. As long as you can move that stop loss to break even as soon as possible, then to me it might be worth taking that trade. But instead, I think what you should probably focus on is just ensuring that this doesn't turn into a smaller area of balance, right? Something that does this, look below and fail. We know that the target could be the top end of the range. So that's the risk essentially of trying to short this in the midpoint of this overall range. Another piece of information that you do have going for you though to the short side is that we already saw the look above and fail on the large range, right? And now technically the target should be the bottom end of the range here, which is why we pointed out that you really have to be shooting for that if you're going to make this trade worth your time and the risk reward makes sense. So Bitcoin does look bearish based on the pretty much full engulfment and 100% retracement of this recent move. You could also start to classify this as a bear flag. The selling is happening on elevated, not muted volume like what we saw kind of in here and some of these lower peaks. It's right on par with the same thing we saw on the way higher. So bears are in control, but just be mindful once again that we are kind of in the midpoint of this range. If you're going to try to short this breakdown, be tactical about it, okay? That's what I would say about Bitcoin. If it's going to be long, because we should cover this as well, if this is going to produce something that does this, a higher set of lows, that's fine. I wouldn't necessarily look to get involved to the long side until we can prove a higher low above this area right here at roughly $42,250 per coin. If we can put in a higher low above that, then maybe it's back to the long side. But again, the look of this chart right here certainly would not suggest that. And just to give you a couple of more numbers here, the breakdown point is at $39,600 per coin, and the target at the bottom end of the range is $34,350 per coin. So moving along and getting into Ethereum, what do we see on these charts, or this chart rather? A little bit different in the sense that here's your balance, right? We never saw the breakout of the top end of balance, but nonetheless, we are pulling back just like Bitcoin. You could classify this as a bit of a bear flag. We have that 100% retracement round trip move on this week's push higher early on in the week. A difference though is clearly we have the support trend line that's still intact. So if there is a breakdown of this bear flag, your first target should be the trend line, and that could be anywhere from, let's just say it happens tomorrow over the weekend, usually kind of rare, but let's just speculate, right? That's going to be 2750-ish roughly, we'll call it. And then if it's later on in this upcoming week, it could be closer to about 2780. So just be mindful of the support trend line, which is still intact to the downside. But again, it does have a bearish slant coming in for the bear flag, 100% retracement. Sellers appear to be in control. That would be the first downside target. And then watch for continuation to see if we can get into this shelf of support from here around 2563. To the upside, just like in Bitcoin, there's nothing to really do long here unless we do something like this with a higher low back above 3245, or if we come into the support trend line and we print a hammer candle down here, very simple setup, right? Indicating that the buyers are stepping up. We have a fake break of the trend line, long over the highs, retarget the breakdown point, and then monitor for continuation with a stop underneath the support trend line, right? So those are the ways I'd be looking at Ethereum into the upcoming week. Let's continue along and get into Binance Coin, BNB. What's going on in this one? A little bit tighter of a range. well, maybe it's not tighter, but it just seems that way here. Not so far off the highs like what we just saw in Bitcoin and Ethereum. Nonetheless, supporting at the support trend line. We are coming into multiple touches at the trend line after a clear two sets of lower and equal highs here, obviously equal from there to there. But nonetheless, that basically means that the support trend line shouldn't really be viewed as an opportunistic buy at this point in time. And subsequently, any more tests of this, if we just continue to ride it, would increase the odds that it actually breaks and fills up this triangle right here. Now, I'm not advocating that you short for this range, because where are you going to place your stop loss? Over the highs, that's more of a 1-to-1. It might even be a negative risk reward ratio, depending on how high this comes before that break actually happens. So I'm not advocating for that, but instead, if the support trend line breaks, it's your advanced heads up to say, okay, maybe the short trade is actually down underneath 390, 360 to open up and trade for this range right here into 57.90. All right, so that's the better short inside of Binance Coin. And just like everything else we've talked about, if it's going to be long, it's got to prove it to us with a higher low above 423.50. And just to give you an idea of how you trade that, if we break and then pull back, you're looking for pullback buys at the level. Or if you want to be a more conservative trader, wait for some more confirmation, it's across through that first higher high, right? So your entry would be here. All right, so that's how I would think about Binance Coin. Continuing along, Cardano, what do we have in this one? Currently building out the bear flag, just like almost everything else we've discussed so far. Just to give you some context of the move, we're still chopping around. Like, sure, there was that little rally in here, but it didn't really do something like what we saw in here. Instead, we're just still hovering around these lows. All right, so that's the context piece. And then if we take out the Fibonacci's, from the lows up to the highs, and let me just put this in the middle of the screen so we can see that a bit better, we're well underneath that 61.8. And as you know, the more time we spend underneath the 61.8, the higher the odds are that we do see a 100% retracement back down towards these lows, roughly that 80-cent area, right? So Cardano does not look good for longs. It actually looks favorable for shorts. On the breakdown of this flag, we're already starting to get out of it. More conservative trader might be looking for the breakdown of 87 cents. Nonetheless, this is not a long, even if this does do something like this and start producing higher lows, I wouldn't really call it a long, just based on how much of this move it has essentially taken back, right? So just because something's not short, right, if it works back into here and does this, does not mean that it's a long. So that's a key takeaway as well for Cardano. So look for maybe 80 cents and then reevaluate there, but I wouldn't really be fishing for longs until we get to a more important support like that 80-cent area. So continuing along, Solana, what's going on in this one? Zooming out for a little bit of context. Again, kind of hanging out down towards these lows. We can do the same thing with the Fibonacci's coming from the low up to the high. And what we'll notice is we're trying to resolve the 61.8. This one isn't as firmly underneath as what we just saw in Cardano, but nonetheless, round trip is already in effect. We're kind of hovering at this area. We still have that flush point here kind of close to that 100 level. If this breaks down, we know we're looking for roughly 84. Right? It obviously has the bear flag look as well. So that's the short setup. And obviously it does look to be in the bear camp as of right now. If it's going to be a long, again, I probably wouldn't even want to trade it long until it does something like this and gets back above this prior pivot high where it clearly rejected on the first drive lower, right? And that's 118.30 on the upside. Need a higher low above that to be more confident in longs to the upside. At this point in time, if you're like dead set on Solana going up to 150, I mean, I wouldn't call you crazy for, again, doing something like this, but where's your stop have to go? Right here, because if we break down underneath, you're taking this heat, right? All the way down to 82. So if you're trying to go bottom fishing, just make sure you do respect a stop. And again, the chart pattern, the chart look certainly would not suggest that a long trade here is the right idea. But I know you guys are going to do what you guys are going to do. So I would just, put my 2 cents out there and say, please use a stop if that's your idea. Continuing along, Polkadot, what do we have here? This one's gotten a little bit more activity. It did try to build out a new uptrend here, but it has failed on the back test of this level so far. I'm going to say so far just because we are continuing to build higher lows, higher highs, and we're not completely breaking down from this kind of trend trajectory that we're on. Now, we're flirting with that right now, and it's really going to depend on what happens over the weekend and potentially early next week, but we need to break back up and over 1965, 20 bucks even. If we can do that, then I think we're a little bit safer here inside of Polkadot for a stronger reversal back to the upside, just recapturing basically the midpoint of the range, right? If I do something like this, it's for all intents and purposes, it's the midpoint. Right, so if we can recapture that, again, that might increase the odds that we move all the way to the top end again, but I need to see the higher low above 20. Otherwise, there's possibility that it does something like this. H pattern, breakdown of this, we know our target underneath is at 1278. So that's the risk to the downside here, but I will, again, give credit where credit is due. I like the little uptrend that is continuing to build out. Watch for that in Polkadot. Crypto.com coin, bringing this one up because clearly we are underneath the support trend line. We're going sideways through time, but importantly, rejecting on the back test. Now, it's not the cleanest thing. Again, I would probably just scratch that and say, hey, it's going through sideways through time. But nonetheless, technically it is a break, retest, and failure on the back test of the support trend line, just like everything. So we'll remove it, I guess is what I'm getting at. But for now, what I would get at is, again, bear flags in play. There's no long trade to be had until we can do something like this. And then in this one, I would just want to see a break of the resistance trend line. I wouldn't even want to get involved on higher low pullbacks around this area. I would want to see this break on momentum and maybe get us closer to that 50-cent mark. Again, the chart would certainly not suggest that as a likely opportunity over the weekend. Maybe something to watch is the flush point instead, closer to 40 cents, right? If that breaks, you're looking for 37, maybe a better short for a better range is underneath that, down towards, what do we have, 32.64, all right? So that's what I would watch out for. A more conservative short trader might do something like this and only take the breakdown here instead of trying to jump the gun early, right? Because there is potential that it does something like this, right? And as we just discussed with everything else, that's a look below and fail. Technically, we could move back to here. So consider all the possibilities, weigh your risk rewards. Again, I would say shorts do look favorable, but because we have support so close underneath, maybe the more conservative trade is just underneath that level at 37 cents. Anyways, Matic, what's going on in this one? Clearly still in the bear camp as well, sitting right on the bottom end of the range, so more bearish, more relative weakness than what we've seen in many of the other charts so far. This would be a candidate to say, okay, if this does break, we're definitely looking for that target. So underneath 134 gets us down to 116, so about a 15, maybe 20-ish cent range to be trading for there. Certainly worth it on something that's this cheap. You know, that's, it's not quite 1%, but it's certainly, or excuse me, 10%, but it's certainly close. Nonetheless, no longs. I would stay far away from longs in this one until we can get back up towards the top of this range. There's really just, it doesn't strike me as, having anything, there's nothing to do here inside of Matic to the long side. I suppose if you want to throw a trend line on this from here to here, maybe a break of that gets you into some of these highs, and that's the long trade. But currently, based on these upper wicks, based on the failure to really get in gear here, this one's been on the 100% retracement for quite some time, just doesn't strike me as a long opportunity. So I would kind of stay away from this on the long side. Luna is up next. What do we see here? Big relative strength. Finally, something interesting to talk about. A couple days up and a little bit of a pullback. Nice and reasonable here inside of Luna. If we throw the short-term Fibonacci's on from low up to high, look at that. Thing of beauty, respecting the 38.2. So any bull flag consolidation that happens here is exactly that, a bull flag, and a breakout of the top end here, roughly $100 even, puts into play a breakout possibly up to the all-time highs around 117, right? And based on a measured move, let's quickly do that because we can do that here inside of the platform. What do we want? We want just a box. There's the rectangle tool. So we'll come in like this. And now we'll just stack that from here. So it's just shy of the all-time high. We're measuring this move in relationship to the bottom end of the flag for that move, right? So it's just shy of the bottom end of the flag. But if you get that close to all-time highs, I would imagine that this does start to act as a bit of a magnet and, suck prices up towards it. So I would be mindful of that here inside of Luna. And again, just noting that there is relative strength. We're consolidating in a healthy Fibonacci zone. Strikes me as healthy. Relative strength. If you're going to look for longs, this is where you're looking. All right. What we want to avoid at this point in time is a head and shoulders pattern. And I'll talk about that possibility as well, because again, we're just analyzing scenarios here. If this type of thing happens, then it's a short underneath 77.36, right? That's the neckline of the head and shoulders. It's currently not in play. So it wouldn't be my first thought. Instead, I would look at this as a bull flag first. Can we get the breakout? And then if not, okay, secondary idea is, okay, 100% retracement. If we flush this, target down here closer to 60. Continuing along, Mana USD for Decentraland, really boring. The only reason this continues to stay on the watch list is because, of course, it is the metaverse play that we're tracking. If you have any better metaverse coins that I don't know about, I'd be happy to consider them. So drop them in the comments if you do. But nonetheless, flagging underneath, getting price acceptance underneath the round trip, bearish with all of these rejections, obviously, flush points in play, and we're just looking for follow through into roughly 182 coming from this set of lows in here. Other than that, there's nothing really impressive to say to the long side. I would be patient for longs only if we can break the resistance trend line, which obviously does not look to be in play anytime soon. So we'll leave it at that. And again, I'm certainly open to new suggestions for a metaverse play. Continuing along, ZCash, a little bit more of an aggressive pullback, but just like Luna, starting to get back into gear. All right, so this one had relative strength through this move here. It's cooled off a bit, we'll give it that, and it's starting to exhibit that relative strength once again. So if you are looking for longs, this is another name that you might want to keep at the top of your list. Something I don't like about it are the two nasty inverted hammers that have printed on today and yesterday's session. So be mindful of that. There's already been two fake breaks of this little flag here. If we were to look at it on something like a 15-minute time frame, what we might notice, if we scrunch out, so here's the flag, right? There's the flag. Fake break number one, retracement. Fake break number two, retracement. So if this really starts to get underneath that 150, let's call it 156 level, we'll go back out to a daily. That might be a little bit easier here. If it starts breaking down underneath the lows of that flag, this general area, we've already seen two fake breakouts. The buyers are looking a little tired here. You could easily see more of that head and shoulders type pattern emerge. So be mindful of that, but it still only means that the short's in play underneath 135.50. All right, so I wouldn't jump the gun short on this one early. I would wait for that confirmation. All right, so that's ZCash. Then last but not least, we have AVAX, Avalanche, the new addition to our watch list. I've already briefly marked up the chart. You can see we do have a support trend line in play. We're getting into it for another touch right here. We also have a resistance trend line in play from here to here, forming a bit of a wedge, but nonetheless, I think the flat top up here is more important around that 97 level for now, at least. So let's just go through the technicals, right? Obviously, we have a bear flag in play. That's, no way around it. That's what's in play here. If we break the support trend line, we're looking for equal lows down here at the double bottom. That's 65.83, and then anything after that is the base of the support trend line, way down around 55. So that's the bear setup, and based on a bear flag, it could certainly do that. Let's just use that cool little trick again with our measured move sort of box. We'll adjust that to here, and it's actually underneath this pivot low. I would still target the pivot low. I wouldn't push my luck looking for lower, but just know that that's certainly reasonable based on a measured move, right? So that's what we have in AVAX to the downside. And again, to the upside, the only way, or the only thing that I would watch out for is, can we recapture this kind of level right here around 82? Let's just round up and call it 82 because we also have some higher lows in here. And by higher lows, I just mean that they are physically higher than the line. They are not actually higher lows. Obviously, this is not a set of higher lows. This is a set of lower lows from here to here. Nonetheless, you get the point. If we can recapture this, maybe it turns into a bit of a breakout point. I would look for the resistance trend line, and if it can tie in nicely with that horizontal area from here, let's grab the price tool. There we go. Might be a little bit early, around 92. Right, so that's your upside trade. How do we resolve this range is ultimately the question. Again, I would feel like based on everything we see in front of us, the bear flag, the round trip here, that it wants to resolve lower. But we'll see, one step at a time. All right, that's going to wrap up our video. If you enjoyed it today or learned anything new, let me know in the comments section or by giving the video a thumbs up. Again, give me any suggestions you might have for a metaverse coin to track. And with all of that being said, I wish you a green trading weekend.